How's everybody doing today? It is about 1:45 p.m. On Monday, and we're selling off pretty sharply. We're down about 2.5%, which always, whenever that happens on the S&P, it always makes me tweet, hey, dust off the 3% down playbook because the market is on sale. And I wanted to just take a second and explain to you what I mean by that. I've gone back and there every so often the market gives you an opportunity where you can go out and you can buy leading stocks at a discount price. And, oftentimes that's a down 3% day. I went back and I crunched the numbers going all the way back to 2000 just to see, what are the odds like of making money by stepping in and buying when the market is trading down 3%. So I want to share my screen real quick with you, so that you can see what it is I'm talking about. And let's see here, I'll just do that. So bear with me 2 seconds while I pull that up. Over the course of the last, well, we'll say since 2000. Yeah, we'll say with that, started at 2000. There have been 84 days where the stock market is traded down 3% or more. And that makes sense, right? I mean, I see a lot of them are bunched in the 2000, 2001 time period. There was a tremendous number of them in the 2008 time period and 2009 time period. So then I went back and I said, okay, of those periods, and you can sort of see the data on the far left here. I went through and I highlighted any ones that were down 3%. I said, okay, what has the market done in the 30 days later? And I did it just on a calendar day basis. If it turned out that the calendar day was a weekend, I just took the next trading day's price. And what we see here is that of the 84 days since 2000 that we've traded down more than 3%, just about 60% of the time, 50 of the 84 days, we finished higher. One calendar month later, 40.5% we were lower one calendar day month later. Over time, over the 30-day span, the average return was 1.07%, and the median return was 2.3%. Not bad, especially when you consider that this is better than typical that you would expect. Usually, it's on a daily basis. For example, a market trades up about 55% of the time, trades down about 45% of the time. So not pretty good. But then when you take and you say, okay, well, yeah, of those down 3% days, how many of them have traded up at least at some point over that 30 days? And we find that 23 of those 34 that finished down were lower 30 days later, a calendar month later. 23 had traded higher at some point. So really only 11 were losing trades over the entire span. I mean, theoretically, it depends on if you're a position trader or how tight to the vest you're keeping it. But the goal here is to show you that if you step in on a down 3% day, the odds definitely favor you having an opportunity to make some money at some point over that next calendar month. And in this case, only 13% are lower. So you look at that and you say, well, 87% of the time since 2000, I've had an opportunity where the S&P has been higher, not lower, in the calendar month following. And if you look at the data just since 2010, it's also pretty instructive. We've had 33 days where the market has traded down more than 3% or more. The average return over that span, 30 days later, 1.56%, median 3.13%. And you see a higher success rate, about 64% of the time, just on looking at 1 month out on a calendar basis, trading up, 36% being lower. So again, a pretty good backdrop to look at when you're saying, okay, well, this feels horrible. Maybe I should be selling. Yes, it's true that you get periods like 2008 and 2009 where they cluster together. Look at these periods right here in February of 2009. Ooh, ouch, right? You look here in late 2008, lots of pain here, but you still have lots of waves along the way where you get gains. So the odds do favor stepping in and buying the damage, if you will. I just wanted to drive that point home for everybody, just so you can see when I do say something in our service. I mentioned down 3% days, or when I tweet about down 3% days, that's what I'm basing it on. I'm basing it on the opportunity to step into the fear, buy, and have an opportunity to make a little bit of money. And whether or not you do that with individual stocks or you just do that with a SPY, I'll leave that up to you. Thanks. Talk to you soon.